Many companies are offering rights issues to their existing shareholders, and I've spoken about some. I've spoken about VFD, I've spoken about Champs, I've also spoken about UBA, and we still have like 3 that is currently planning on coming out with the modalities of their rights issue. And in today's video, I want to talk about TIP. This video is meant for TIP rights issue, and TIP is the Initiate PLC. If you have been watching some of my videos, you know that this is one of the companies I believe in, especially for long term. And now they are offering rights issue. But now, before I go into the figures and what you stand to gain by taking up this rights issue, the opening date is yet to be out. We only have the qualification dates. But as an investor who already has TIP, the Initiate PLC, in his or her portfolio, what should you do? And even before we go into the numbers, the question is, why do companies normally offer rights issues to existing shareholders? Because one of the videos I made on rights issues, somebody was talking about the aspect of dilution. And I remember talking to the person, I said, when you talk about dilution is only affect on a short term, but on a long run, you need to look at the effect. And I think another person was talking about, why can't they issue commercial paper? And I need to say this, when they issue commercial paper, that is they taking up debt. And someone like me, for instance, if I want to invest in a company and I see your debt to equity ratio and I see that your debt is higher than your equity, it's already a red flag for me. And many investors like that, nobody wants to invest in a company that is highly geared. When I say highly geared, it means it is highly leveraged. When I say it is highly leveraged, it means that the company is sitting on so much debt. The implication is that when they make money, they will have to first of all pay their interest. They will have to first pay their creditors before they even remember shareholders. It is what is left that they can now say they want to give to their shareholders, either as bonus issue or as dividend, or even replying back into the business as reserve or retained earning. So let's look at it. What is the essence? Why do they offer rights issue? Number one is to raise capital. Whenever they want to raise capital, either for growth or for expansion, they usually come out to offer rights issue. When they want to grow or they want to expand. Growth in the aspect of they want to acquire more assets. They want to acquire assets, and also when they want to finance new projects. That is one of the reasons why they offer rights issues to existing shareholders. And if you don't know the meaning of rights issue, it simply means a company offering their existing shareholders the opportunity to buy their shares at a discounted price. Most times when they have that rights issue, when they are coming out with the rights issue, it's usually at a discounted price. You may say, but GBA is not at the discounted price. I need to say this, that when they were planning it initially, it would have been at a discounted price. But unfortunately, there was a retracement in the market price. So that is what is happening in the case of UBA now. So it wasn't as if they did not factor in the aspect of discounted price in the first place when they were planning it. For instance, in the case of TIP now, as of today, the rights issue is at a discounted price, even a margin of 6 naira, but it's yet to open. By the time it now opens, you never can tell. The price could have been traced. I don't know whether you get what I'm saying, because there's usually a window between the time it was declared publicly and the time it eventually opens. VFD is yet to open. Champs has already opened. UBA is already open, but for this now, for TIP, is yet to open. Presco is coming up, LLX is coming up with their rights issue, IMG is also coming up with their rights issue, and many companies like that are still coming up with their rights issue, especially all these insurance companies. Most of them are still going to come up with rights issues because they need to raise fresh capital in order to meet up with the capital, the new recapitalization threshold of the NERA 2025. So let's move ahead. They also offer rights issue because of expansion. Maybe they want to enter new markets. That is what TIP wants to do. They want to enter new markets. They are looking at expanding their base to other African countries. Currently, they are in Nigeria and in Uganda, and also to expand operations. So that's one reason. They use it to reduce debt or pay loans. So whenever you say a company that is offering rights issue just to raise capital for expansion and for growth, it shows that the company is on the right path, especially by the time you now look at what they want to do with the right issue. In the case of TIP, they want to expand to other African countries. Now, if you see a company that is using right issue, offering right issue in order to reduce debts, then you may need to look at their debt to equity. Is it that they are in so much debt? It may be a red flag for you, and it may be also to strengthen their balance sheet. So you can see that it's a two-edged way. It is only when you look at their financials that you understand what they really want to do. It is not just it may not just be to reduce their debts. It may be to improve their balance sheets. They want to improve their debt to equity ratio. Let's move on. So that's another reason why they raise capital. To meet regulatory capital requirements. Just like I said, in the case of insurance company, most of them are still coming up with rights issue. So all this surge you are seeing in the market now, it is only for a while. Because what many people don't know, especially if you are a trader, fine, you can just go in and out of the market, you can take the advantage of the fundamentals. Because for instance, what's really made the insurance company to be spiking now is because of the Naira 2025 that happened. And when you look at it vividly, on Thursday and Friday, there was a retracement. Then on Monday again, you saw that there was a spike because another fundamental came out that made it to spike. But if you are not a trader, you are not trading fundamentals. I mean, when I say fundamentals, I mean you are not trading the news. You are not following the news, looking at the market bulletin, looking at corporate disclosure. Then it will not be safe for you to be trading. I'm just digressing for a reason. So for instance, what is happening in the insurance sector is the traders just taking advantage of the Naira Act that was signed, Naira 2025 that was signed. Now, this is yet to be gazetted. After it is being gazetted, then we still have like a 12-month window before it is implemented, before the companies begin to say, okay, are we merging? Are we acquiring? Are we coming up with a public offering or rights issue? How are we going to meet this new recapitalization threshold? So they are still going to come out with those modalities. So this one you are saying is temporary. So that's one of the reasons why they offer rights issue, to meet up with new capital requirements. So for instance, insurance companies are still going to come up with this. Now, another reason is to retain ownership and control. To retain ownership. They want their existing shareholders to retain ownership. They don't want it to be new shareholders, because if they go for public offer, it means the shares will be diluted. But even if it is diluted down, it is still within the existing shareholders. I don't know whether you get what I'm saying. Unlike they offering public issue or maybe private placements, this helps the company to maintain, to retain ownership. And number 5, which is, it is better than taking on debts. For me, a company that needs, let's say, 30 billion, 40 billion, 50 billion, and that is issuing commercial paper, when it is not the likes of Dangote Cements, when it is not a large market cap company, then it shows that they may be taking too much debt when you look at their financials. So having said that, so to me, I prefer a company offering rights issues to their existing shareholders than taking on debts. So what is the implication if you don't take up this rights issue? What is the implication to you? Number 1, dilution of ownership. Your ownership will be diluted. Because that rights issue did not take up, another person will take it up. That's number 1. Number 2, dilution of earnings. Your earnings will be diluted because you did not take up the rights issue, even from the perspective of the company. So then the last one is missed discount opportunity. You know you are buying at a discount. For instance, in the case of TIP, the current market price as at the time of making this video is 13 Naira. It's 13 Naira per share. Now, the rights issue price is going to come at 7 Naira. It's going to come at 7 Naira, which means you have an unrealized gain of 6 Naira. Unrealized gain simply means gain on paper. So you can see that rather than topping up now at 13 Naira, it is better you just hold on for that rights issue to be open. You just wait. But if you don't have it, then you can go in at current market price. But if you're an existing shareholder, it is just wise for you to wait until it opens, until the right issue offer opens up, so that you can take up that right offer. The qualification date is 1st of August 2025. 1st of August, which means if you don't have tip in your portfolio on this date, you are not qualified. Then it is 145. What is 145? It means if you have 100,000 shares, for instance, you are entitled to 20,000, which means for every 5 shares you have the right to buy one more share. One share. For every 5 you have. So whatever number you have, just divide it by 5. That is the right you have to buy. So let's come to the numbers. Let's say, for instance, you have 100,000 shares at 13 naira, the current market price. That's 1.3 million. Now 20,000 shares which you are eligible to buy, you have the right to buy, is at 7 naira. That's the right issue price, which is now 140,000. Now, by the time you calculate your money now, the total number of shares, in terms of value, the total shares you have in terms of value, it is 1,440,000 naira. What is your total number of shares? You are going to divide it by it. We call it total value all over total volume. So what is your total value? The total value is 1,440,000. What is your total? Your total volume is 120,000. So by the time we divide it by it gives us 12 naira per share. So if you don't take, so which means at the end, your share is coming at the rate of 12 naira, more or less like when you average down. But if you don't take up that offer, you are still going to be at 13 naira. So 1 naira is something. I hope you get my points. So that is just the numbers. If you have any comments, thoughts, or question, drop it in the comment section below. If you are yet to subscribe to this channel, kindly do by clicking on the subscribe button, click on the notification bell so you can be notified whenever we release any video. Till we meet in our next video, stay blessed.